Perfect. So like I said, I'll just run through the assessment. I'll go through some of the finer points, some of the things people do get confused about. But if at any point you have any questions, just feel free to type something in the chat. I'll just stop, we'll pull up. Because chances are if you have a question, someone else probably is a bit confused at the same area. Everyone can see my screen, hopefully. Unit 4, Assessment 2, Manage Finances Within a Budget. So hopefully by now you've all had a bit of a read through it. We'll start with the projects at the beginning. We'll just brush over them fairly briefly because they are quite simple. What we'll focus on more so is the actual tables that we go through. So project 1, you can have a bit of a read through that yourself, but essentially it's asking you, now that the budget has been finalized, we'll see that on the next page, you need to write a bit of information for the manager. So first question A, write a brief memo to the manager advising that the budget has been finalized. Include in your memo the desired budget outcomes for the store, as well as the importance of budget control for all employees and the importance of keeping detailed records of how the money is spent. Big mouthful. What we're really looking for here is that you take the information from the budget and just write, I usually would recommend in an email format, just a bit of information to the manager. So here's where you're going to be looking at things like, let's roll down. This is the budget here, by the way. So for store 1, the key figures that we're really looking for are probably the net profit and loss, the percentage of budgeted revenue. You might go into the total revenue and the total operating expenses. Those are really going to be the key figures that if you were communicating this to someone, you would really be focusing on. So it doesn't have to be huge because, again, this is a fairly simple memo. So you'd just be going through saying, hey, look, this is our projected net profit and loss. This is our projected revenue. And don't forget to talk about the importance of budget control. So you'd be saying something like I said, these are the figures. Look, it's really important we stay on top of this, et cetera, et cetera. If you have any questions about this, let me know. Again, as long as it has those key figures there, that's all we're really looking for. B, so again, I'll let you read through that. I won't go into too much detail. I don't want to just sit here and read you a book the whole time. What you're going to do here is you're going to start crunching a few numbers. So remember, this is a yearly budget. So obviously to calculate the monthly sales budget for store 1, we're going to be taking the sales budget and dividing it by 12. Similar again, how much has been allocated each quarter for training and seminars for store 1. I'll just do this one with you. Store 1, training and seminars, we've got $10,000. A quarter is obviously 3 months, a quarter, so $10,000 divided by 4. It really is that simple. None of the math in here is incredibly complicated. That's very simple, but it's more about going through the process. You'll see when we get down and there's a few decimal places and percentages, it might get a little bit more difficult. But for these first questions, it really is that simple. Don't read into it too much. Everyone can still hear me fine? Everything's good so far? Cool, excellent. Again, similar, how much has been allocated each month for advertising and promotions for store 2. Just remember, it's store 2 now, not store 1. Find your advertising and promotions, store 2, and it's each month, so divided by 12. It's pretty much that simple. Similar again to the fourth question. I can't really tell you too much without giving away the answer, but that's basically the procedure we want to see you go through. So just keep in mind, this budget here in project 1 will be sort of coming back to this one. So these figures here, this is really what we're going to be looking at. For those of you with a student workbook, this is exactly how you should be seeing it. If anyone doesn't have a student workbook and wants one, I can send you out one. They're a bit new. So it's just got a few more tips and the layout's a little bit different, but for all intents and purposes, it's the same thing. Excellent. So next question here. What we're doing is essentially just adding up the wages for each store and comparing against the budget to see if it is correct. Very simple math again, but I'll just run through the first one with you to sort of cover it off. So we've got store 1. There's a $50,000 base salary manager. There's 2 $40,000 salaries in there and a $30,000 salary. So all we're doing here is adding up 50, 40, 40, and 30, which comes to 160,000, and comparing that to the budget. So for store 1, if we are paying $160,000 in wages, is that enough to cover it? We've got store 1 here, take it down to wages salary. Look at that, wouldn't you know? Fantastic. So what we want to see for this one here is that, I know it sounds a bit silly, but just do the working out. So 50 plus 40 plus 40 plus 30, just so when I mark it, I can see, that what you've done. And I guess if you have made a mistake, where you might have made a mistake, and just state whether it is or isn't enough money. So like I said, this one here is 160,000. We look up here, 160,000. So you just simply be saying, yep, there's enough money been allocated. No questions so far? Fantastic. Either means I'm doing a really good job or a really bad job, but either way. So again, doing that for store 2 and store 3. Similar thing here, but it's the same thing. Yep, perfect, easy. So that's project 1. Like I said before, there's 4 projects, but we will be coming back to project 1, just that budget there. It'll make sense a bit later on. Again, definitely let me know if there's any questions, because people do get confused in this one. Project 2, so what we've got here is a bank statement. Now, one thing I do notice people get pulled up on, just remember the working we were doing in project 1, this was for an annual profit and loss budget. Down here in project 2, this is a bank statement for 1 month. So just be aware, some people do get a bit confused. If you are translating things between a monthly statement and a yearly statement, obviously you're going to be dividing by or multiplying by 12. So just keep that in mind. Some people do sort of fall into that trap. We'll scroll down. A couple of important things to note. The figures with an asterisk next to them have GST included. Now, for this project, because there's a number of reasons, but we won't be including GST within our figures. Mostly because the calculations we'll be doing here are an internal sort of calculation for the business, where GST isn't really a factor. GST is more of a tacked on government tax at the end. So anything here where we have an asterisk next to it, so we've got 1, 2, 3, 4, 5, 6, 7. These figures here have GST on them. Now, what we need to do is actually use the figure without GST. So, I mean, for some people, you can have a look at that and pretty clear that 10% has been added on there. So what you need to do to calculate GST is divide it by 11, will give you the amount of GST. So it'll be 880 divided by 11 will give you $80. And you take that off, the original figure is 800. Similar for this one, the original figure would be 500 and 1,000. You can sort of pick them out sometimes when they're that easy, but once you get a bit of decimal places and stuff, it gets a bit confusing. The only other thing here is for the wages. The figure we have here is for the wages without the pay-as-you-go income tax included. So it's a bit beyond the scope of what we're doing here, but the important thing is you need to use this figure here, 7,500, because we do want to include the income tax we paid. So I don't know why that's there, but forget that. Use 7,500 in the next table. Okay, so what we're going to do here, we can go through this a bit if you like, or I'll just sort of brush over the whole table as a whole. What you'll be doing here is filling out the actual figures. So the actual figures will be the ones from the bank statement. These are the actual costs and of each item, I guess, that we've gone through. So you'll be going through accounting fees, advertising, promotion, bank charges, rent, and you'll be using these figures we have from here. Now, one thing I know a lot of people get pulled up on, an account fee is not the same as an accounting fee. An account fee is a bank charge. So that would go into here. So what we'll be doing here is going through, if there's no value for it, make sure you put in a 0. So we'll be going through and putting in the actual. So advertising and promotion, have we got that one there? Advertising, remember take off the GST. So this figure here, hopefully I can write in this, will be 1,000. And you'll just be working your way through bank charges, account fee, should be $40. You'll be going through just filling out this table. It's pretty much that simple. Like I said, if it doesn't have a value, put a 0 in. Don't ever leave it blank because it just looks like you made a mistake. All good? Everyone's still with me? Fantastic. The budget here will be using we'll be taking that from the table in project 1. So again, sorry, I've gone past it. It's a lot easier when you've got it all in front of you. But this is our budget. So we'll be taking the figures from here and putting them in this column here. Now remember, because the budget is for a year, and we're doing the statement for a month, we're going to have to take, it's going to be the budget value divided by 12. So something like advertising and promotion. Sorry, I forgot to point out too. This is for store 3. So just be aware that it does jump between stores a bit. Just need to be aware of which one you're looking at each time. So advertising and promotions for store 3 is $10,000. Now we want to take 1/12 of that, which off the top of my head, I've done this before, but I'm fairly certain it is 833. Does that make sense? Everyone's still good with that? So we again, just go through and just fill out these based upon the budget first table. So what we're really doing here is we're looking at the budget we had for this month, for July, and we're looking at what actually happened, and we're going to compare how close our budget was to the mark, which is where we come to the variance. So the variance is what it sounds like. If you have any confusion about favorable and unfavorable variance, just let me know. But I think they kind of speak for themselves. So we'll just be working out the difference, actual minus budget, which at a guess, again, it's 167. Pretty straightforward. Again, work out the variance for each one. What you need to be aware of though, is that the variance could be negative or it could be positive. So this one here, it's 100 minus 833, $167 variance, that's fine. But the actual may be less than the budget. So what you're going to do there, these are going to come out in, some are going to be positive, some are going to be negative. Now, when you total that up, you need to add together all the positives and subtract all the negatives. It'll make sense when you do it. You've probably done something similar to this before, but just remember that the variance is you've got favorable on one side and unfavorable on another. If you add them all up, it's not going to make any sense. So what we'll do that. I'll go through that again at the end. Some people do get a bit confused, but what we need to do next is work out the variance percentage. So this here is going to be the actual variance amount as a percentage of the budget. So it's going to be, if everyone remembers how to work out a percentage, it's going to be 167 divided by 833 times by 100. And I believe this one comes out to be somewhere around 20%. I can't remember off the top of my head. The formula is here too, I believe. Yep. So if you do get a bit confused, again, just have a look at the formula there, or just have a talk to me. So what you'll be doing there, again, filling out this one, working out the variance, and then working out the percentage variance for each one. What you need to do then is obviously total them up. So you're going to total up the actual, you're going to total up the budget, and you won't be totaling up the variance. The best way to do it to avoid any mistakes is to recalculate the variance based upon the totals. Don't ever add up the percentages and average it out because it'll come out weird. Calculate the percentage again based on these figures. That's really important. A lot of people slip up on that and you'll just end up with crazy figures. It's really easy to look. If you get like 4,000% variance, obviously the answer is wrong. Just have a look at, and does it look right? Have a look at the numbers. Doesn't make sense because a lot of people here will, do something like this, and obviously it's way off. So just be aware. Have a quick read over and just go, do these numbers look about right? You should be able to get a pretty good feel for what's going on. Does that make sense with everyone? Can I just get everyone to sort of chat it in if that's good?
Yeah, that makes sense.
Everyone here? Fantastic. All good? Shay, just sent it? Perfect. Slara still with us? Perfect. Cool. So we'll go down to D. What reason could you provide for having no accounting and training and seminar expenses for the month of July? So what it's referring to there is that when you come through to this, the actual will be 0 and the budget will be, can't remember off the top of my head, but you do have training and seminars budgeted for that month. So what it's trying to say is that when you do up a yearly budget, when you divide it by 12 to get the monthly budget, you're going to have a figure for that month. Now, you might not have training every month. You might have it every 3 months. You might have it every 6 months. So if you do have, say, $10,000 allocated for training, it's going to show up in your monthly budget as $830 each month. Now, that might be one training session a year that costs $10,000. So 11 months out of the year, well, actually 12 months out of the year, you're going to have this variance because it's going to represent it as being, slowly taken out each month when really it's one big lump sum. Does that make sense? Yep. Cool. So what it's asking here is, okay, we had money budgeted for July for training, but the actual was zero. Why was that? And again, like I just went through with you, it's just because maybe we didn't have training that month. Maybe we have training every 3 months. Same thing with the accounting fees. Maybe we only do the accounting at the end of the year, but we do budget for it each month. So that's all you really need to sort of touch on there. Cool, Lara, excellent, on board. E, are there any withdrawals or deposits on the bank statement that do not get generated on the profit and loss? What's the tax here? There is. The tip I'll give you, this one you might have to do a little bit of research on your own. The tip I will give you is that this really represents revenues and expenses. So there is something on here which is a liability. Does anyone have much experience with accounting or bookkeeping? You might have heard these terms before. You don't really need to know too much about them, but all you need to know is that a liability wouldn't be on this sheet, and you just need to sort of figure out which one of these is a liability. It's not that we wouldn't record it, it's just that in what we're looking at here, it just wouldn't be included. We'd have that on a balance sheet, which is another type of financial report. So just have a bit of a look at the things on here, and if anything kind of sticks out to you as being a bit different, like a one-off payment, hint, to the government, have a look at that and see what you think about that. I won't go into too much detail, I'll give it away. Cool, perfect. No questions. So the next one we've got here is Project 3. I actually really enjoy this one. I don't know why. I think I just like numbers too much. But what we'll be doing here is essentially just filling in this table. This one's, I think, fairly straightforward. The important thing to note is that it is a running table. So the way you would do this one, I'll just throw in a couple of figures. All the information you need is here. So rent costs are $880 each month, bank charges are $40 each month, et cetera, et cetera. So you'd go through and go, okay, rent, $880 each month. You go, 880, 880, 880. So you put that in each month, and you'd be basically going through, similar with, let's say bank charges is $40 a month. So 40, 40, 40. You'll just be filling this table in. There is a couple of things that are only, here we go. Training and seminars. All store 3 staff are attending training seminar in September, costing $2,200. So this one here, training and seminars, it'll only go in September, and the others will be 0. Make sense? Pretty easy. Now, the trick here, once you've got all this filled in, you're going to have all of these, basically, I wonder if I can highlight that or something, everything up to here filled in. So we're doing a cash flow forecast here. So this is I guess, for lack of a better word, like I was saying, a running document. So you'll be taking the balance from the previous month, this one here, you'll be adding the sales for the month, and then you'll be taking away all the expenses to find out how much money you'll still have at the end of the month. So just remember here, this one, you've got to start at the beginning and work your way through. So you'll be taking this figure here. Everyone can see my mouse? Yeah? You'll be taking this figure here, adding your sales, so you're going to come out to about 44,000, and then you'll be subtracting all the expenses. So you'll be going 44,000 minus that, minus that, minus that, so on and so forth. That'll give you the anticipated bank balance for the end of the month. So like I said, that's how much money we think we're going to have at the end of the month. So that figure there, we'll call that one X. So add those together, subtract all of those, will give you this figure. Now we go to the next month, September, and the balance brought forward is going to be the anticipated bank balance. So this up here is going to be the same figure. It's going to be X. So you're going to add the sales, then you're going to subtract all of these away, which is going to give you Y, and then you probably guessed by now, you're going to take that figure, you're going to put it up here, and you're going to keep going. And essentially you keep going on and on and on and on and on. So we can go, okay, in December, how much money will we have in the bank? Everyone happy with that one? Perfect. The problem I find here, just being careful with some of these figures, especially the ones that only occur in 1 month. A lot of students tend to put this in the wrong spot, or they'll put 2,200 in each month. Just make sure you take your time reading through this, and then check your figures too. A lot of people will add this up and it'll come out to about $500 million. So obviously something's gone completely wrong because you only started with $40,000, you know. So if you start with about 40, you know, you're going to end up with, you know, somewhere 30,000, something like that. So if you get a bizarre number, just go back, check it. You might have pinned it in the calculator wrong. But I think that one's pretty straightforward. No questions? Am I being clear or am I going too fast? Is no one's confused? Okay, perfect. That's good. That's good news. Good. It's not too hard though, is it? It's just numbers. People see numbers and panic. Perfect. So that's project 3. Done. Easy. Simple. Project 4. This one's going to be getting a bit bigger. So again, I'll let you have a read through that in your own time. But essentially what we're doing here in project 4 is we're going to be taking the budget we had in project 1 and we're going to be making a few changes. So the changes we're going to be making are around the advertising and marketing. So based on the sales figures, a bunch of people have gotten together and basically said, hey, look, we're gonna split the advertising. We've got so much to allocate for advertising. We're going to split it up between the stores a bit differently. So here we go. Just in here. So store 1, because they have the greatest sales target, they felt they should get more of the advertising, biggest slice of the pie, I guess. And they wanted to add a new staff member. So again, have a bit of a read through it. If it does get a bit confusing, just let me know. But what we're going to be doing is re-divvying up the advertising and promotions. We're going to give 50% to store 1, 30% to store 2, and 20% to store 3. So now, just remember previously it was these figures here, and now we're going to this. We're also going to add another employee to store 1, so that's $40,000 in wages and 9.25% of that 40,000 in superannuation. And then we're basically going to go through and just recalculate everything. So it'll make sense. We'll have a bit of a look at it. I'll highlight some things. So the first thing, that doesn't look right. The first thing we're going to do is recalculate the advertising. So remember here, the total is 40,000, pretty straightforward. It's going to be 50%, 30%, 20%. That's all we're going to do. We're just divvying it up again. Just make sure, again, like I said, if the 3 of these add up to 200,000, obviously you've done something wrong because the total is meant to be 40,000. What we're going to do then is change the base salary wages for store 1. Now for these calculations here, just remember the original budget is this one here. So everything in here was how it was, and we're going to be adding to or changing this original budget. So when we come down here, where are we? Wages for base salary for store 1, we're going to be taking that 40,000, that new employee, and we're going to be adding it onto the figure we already had. So the figure we already had was 160,000, I think. So just remember, you've got to add it onto what was already there. We're not just popping 40,000 in here, we're adding it on top of what was already there. So again, you know, put that figure in, we're going to put these numbers together and we're going to get a new total. So just remember too, every time you make a change, you have to add up the totals again, you have to calculate the percentages again, you have to do everything again. Same with superannuation. You need to work out how much superannuation, what is 9.25% of 40,000, and you need to add that on to the superannuation that was already there. So a lot of students here will calculate 9.25% of 40,000 and they'll just punch that number straight in. So don't do that. Remember, you got to add it on to what was already there. For anyone who hasn't done percentages in a while, if you want to work out what 9.25% of 40,000 is, it'll be 0.0925 multiplied by 40,000. So again, feel free to, if you do have a bit of trouble with the math, or you just been out of it for a while, let me know. More than happy to help you with the numbers. So you're working out the superannuation and you're throwing that on top of what was already there. And then again, you're going to go through and you're going to work out, whoops, we don't want to do that. We're going to work out a new total. So that's basically going to fill this in. What we're going to do then is total up each column. So we're going to work out the total operating expenses. The total operating expenses are going to be all of these. So we're going to go through for store 1. We're going to calculate all of these, which is going to give us this figure here. just call it XXXX. And then we're going to work out the net profit or loss. So the net profit and loss is obviously going to be the money we've made and minus the money we've spent. So it's going to be 400,000 minus your total operating expenses, which will give us this figure here. So we're going to go through and do that for each one. I think everyone gets a picture. And we're going to add up the total. So we'll know exactly how much money all the stores have made, how much money they've all spent, and then the total profit and loss for all 3 stores. What we're going to do then is work out the percentage of the budgeted revenue. So very similar to what we did in the other table. We're just going to take the net profit and loss, and we're going to divide that by the total revenue, multiply it by 100. Sound good? So again, I don't think any of it's really too complicated, but there is a few things you just need to be aware of. Like I was saying, adding this onto the original figure, just not throwing that in, because this assessment really does have to be 100% just in terms of the figures. There's a little bit of a leeway, but you really do need to make sure your numbers are accurate. Excellent. So from there, we're going down to D. What we're doing here is based on what happened and the changes we've made. We're writing an email to the accountant of store 1, just basically letting them know what happened because we made these changes. So it talks about how the changes will impact the net profit and loss for each store and the overall business, and include whether the changes, in your opinion, would impact on service levels for the store. Has everyone heard of what service levels are before? I'll go through it. So basically what it's saying is write an email to the accountant, give them some of the key figures. So for store 1, the key figures, what we're really going to be looking at here is the net profit and loss and the percentage of budgeted revenue. Now, we've gone through this before, but because we've made the changes, we really want to compare this to what it used to be. So again, going up to the table in project 1, I would go as far in this one to say, okay, the net profit and loss is now X. It was Y beforehand, and just really comment on the difference these changes have made. Well, because basically what you've done is you've given them more advertising, but you've added another $40-something thousand worth of expenses there. You've put a new staff member in. So essentially, their profit is going to go down based upon this. But in your opinion, how would this impact on service levels? So the service levels are what kind of quality and quantity of service does the customer get? So what I'm trying to get at here is, okay, the profit's gone down because you've added a new staff member, but they might in turn allow for better interaction with the customer, better service. The customer's happier because they don't have to wait as long. So in turn, it might really add to the profit in the long run. Does that make sense? So even though when you're doing a budget, it might look good on paper and you might have saved money, or it might cost you more money, but you really do need to consider the impact, especially on service levels and customers. It's at the end of the day, I mean, the customer, that's where the money, the business is coming from. So it's just saying, okay, keep that in mind too. Even though we have made changes to the finances here, it really does impact what the customer gets. No questions? I'm guessing that made sense. Perfect. And E, write an email to the manager of store 2 advising them of the proposed changes to the advertising budget and why this is taking place. So just remember, store 2 was I'll pull it up. Store 2 did have 37.5% of the advertising budget, and it has dropped to 30%. So essentially, you need to write an email to store 2, basically telling them why they have less advertising. So just in there, talk about that store 1 has a higher sales target, why you've made this change, why you've given store 1 more money, and try to tone it in a professional. Try not to be condescending. This is where you really want to sort of put a bit of tact in. Just a simple email saying, hey, look, this is basically what's happening and why. I like to think of this one as if you're sending an email to a grumpy manager who's just gotten angry. So you're really trying to inform and console, I guess, as best you can. Does that one make sense? again, that doesn't have to be a massive email. A paragraph is fine. With a lot of these answers, I'm not looking for massive reports. I just want to see that you understand what's going on, especially with a couple of these short answer questions here. A sentence and a half is fine, as long as I can really see that you understand what's happening and why we're doing this budget, where we're getting these figures from. Does that make sense? Everyone's still on board? Okay, perfect. I've rushed through this super quickly. That's it. So that's the last question there. Does anyone have any questions about any part of that, or do you want me to sort of go back and do the calculations on a couple of areas? Yes, Elijah. Oh, yes, makes sense. Oh, that's even better. Perfect. No questions at all? No? Okay. Well, like, wow, that's fantastic. I'm really happy. Not at the moment. Yeah, perfectly. Like I said too, if like, I'll only be here this week because we've got the Christmas period, but you're actually all my students, which is strange. It worked out that way. Feel free to send me a text or give me a call. More than happy to sort of run through any of this again with you. With a lot of stuff like this though, too, the more you've done, the easier it is for me to give feedback and help you with it. So definitely jump in, give it a go, send it through to me. Basically what I'll do with this one is if you've got any figures wrong, which like 99% of students will the first time, one little figure, I'll just go through, highlight them and say, hey, look, have a look at this, or, you might have done something wrong here. The problem with a lot of these, especially the cash flow forecast, if you get one figure wrong at the beginning here, the entire thing will be wrong. It'll just sort of compound and blow out. So don't be afraid if I send you back a Word document that looks bright yellow because I've gone through and highlighted everything. That's not a bad thing. It means you might have literally missed one number. Perfect. Okay. Can everyone let me know if they're happy with that, or if they've got any questions? I'll leave it there. Everyone either give me a thumbs up or type something in there. Thumbs up. Perfect. Shay's happy. Cool. I bet I didn't look like everyone thought. I don't think anyone here has actually seen me yet. So yeah, I've talked to you all on the phone. That's good. Fantastic. Okay. I'll leave it there. Like I said, any questions, feel free to get me at any time this week. Otherwise, thank you very much for coming to my first successful webinar. And hopefully I'll see you guys again soon. See you, everyone.